Hi everyone again. Thank you for joining us tonight. It's great to see all of you here. I'm James, market strategist at USmart Securities, and I'd like to welcome you to another episode of Talk Stock with James series. Tonight, our main focus will be on Block Company, and the topic is Block's 80% punch, no pain, no gain. The question is, since Block Company has plunged more than 80%, does it make it a good investment? And we are conducting this Talks Out James series every alternate Thursday, 7:30 p.m. The next one would be 26th October. If you are interested in listening to the replay of the webinar after it ends, or if you would like to access to our previous webinar, please visit the Talk Stock with James channel on YouTube. I will be uploading the replay video for this webinar this few days. And while you are at it, please also subscribe to our YouTube channel, Talk Stock with James. Just to get the disclaimer out of the way first, this presentation is presented to you for education and sharing purpose only and does not constitute to any form of advice. Past performance is not indicative of the future performance. Let's talk about Block Company, formerly known as Square. Block is a leading fintech company that offers convenient mobile payment options and user-friendly point-of-sale services. Business owners adore Block for his hassle-free digital transactions, making it the go-to choice for entrepreneur and small businesses. In 2021, Square changed its name to Block to better reflect a focus on not only crypto, but a wide variety of the business lines. But I still prefer call the company Square. You can think of Square as a combination of many companies. The Square itself is a complete point of sale system that takes payments, tracks inventories and sales, and provides reports. It's similar to Clover, Toast, Zeta by PayPal. Cash App is a digital wallet that allows customers to bank, invest, send, and receive money. It's similar to Venmo by PayPal or Zelle, or in Singapore context, it is GrabPay. On top of that, Cash App is also an investment app that can make investment in stocks, exchange traded funds, and Bitcoin. TBD is a division of Block, which is a new open source toolkit for its Web 5.0 project, which is meant for developers to create decentralized internet applications. So it's similar to Alchemy. Tidal is a streaming service for artists. Basically, it's Shopify. Square owns 80% stake in Tidal. Square went public in November 2015 with an initial price of $9. It reached its all-time high at $276 in 2021, but since then it has dropped significantly, now standing at $46.69, marking an 83% decrease from its all-time high. So the most important question here is whether it's now a good time, a right time to invest in Square since it has dropped so much. As usual, I would like to go through the business model and financial statement before I tell you my conclusion. But if you would like to skip all that, my short answer is Square is an okay investment. I am not particularly excited about Square, but I do see the beauty in it. In short, Square or Block is a merchant service company providing seller the hardware and software to run their business. Block is previously called Square, and the co-founders are Jim McCaleby and Jack Dorsey. They co-founded Square in 2009. Jim McCaleby is now the director of Block. Jack Dorsey is the chairman, the principal executive officer of Block Company. However, if you ask the retail investors out there, many retail investors are likely more familiar with Jack Dorsey. He previously served as the CEO of Twitter before leaving Twitter to concentrate on his role at Square. You might now recognize him by his prominent long beard. He has adopted a more contemporary appearance. Perhaps this change in his appearance reflects his evolving focus and interest in the cryptocurrency world. Jokes aside, when we talk about Square, they are basically two businesses, Square and Cash App. The seller ecosystem is called Square. The buyer ecosystem is called Cash App. Next, let's talk about seller ecosystem first. Square started with a tiny Square card reader in 2009. I reckon the company is called Square in the first place because the Square device is square. So essentially, Square is a credit card reader. It gained popularity initially because many small business owners used to accept only cash payment, therefore turning away many customers who wanted to pay with cards. But with Square, business owners nowadays can plug in this small device into the headphone jack of their iPhone or MacBook, enabling them to start accepting card payment. The best part here is you can sign up for Square and they will send this card reader to you by mail for free with no commitments or long-term contracts. Soon after, they introduced Square Stand to replace the traditional registers and the point-of-sale services system as well. A few months later, Square Company was basically doing well, and the company sooner realized that they weren't just making a credit card reader, they were creating a service to assist sellers in making sales. So this realization prompted them to ask a follow-up question. How could they help sellers make more sales? The answer to that question led them to develop a suite of tools and services. Essentially, Square aims to help businesses expand. They want to be there every step of the way as your business grows from 1 store to 10 stores, from 10 stores to 20 stores. Square doesn't only offer point-of-sales hardware. Their services encompass a full range of solutions, including the point-of-sales software tailored for retailers, restaurant and service providers, an online store platform, invoicing services, customer relationship management, employee and location management tools itself, a debit card, banking services, and loans. The idea behind all these services is to build an ecosystem for sellers. Seller can hire Square to handle maybe 5 or 6 specific tasks for them. If they are not satisfied with one, they can fire Square for that one, but they are not firing the entire company. But when we talk about the star product of Square in the seller ecosystem, we always talk about the point of sale system. In US, about 68% of business rely on point of sale system to capture new sales at the checkout counters. The North America point of sale software market alone is set to grow at a 8.7% CAGR from 2023 to 2030, according to Granville Research. The global point of sale software market size was valued at 11.9 billion in 2022, it is expected to reach USD 27 billion by 2030, expanding at a CAGR of 10.8%. In North America, Square holds the largest market share of 27.65% in the point of sale system market, followed by Toast with 22.84%, Lightspeed with 7.7%, First Data with 6.2%, Clover with 5.5%, among others. There are probably over 50 or maybe 100 companies offering point of sale system in the US. Square is widely regarded as one of the best options, but due to intense competition and similar offering among competitors, most companies in US offer comparable services, including loyalty programs, email marketing, invoicing, inventories management, and employee management. One of the Square's strongest competitors is Toast, which has been gradually gaining grounds. Toast offer more extensive restaurant-specific features, such as perishable inventory management and menu performance reports. Toast also provides customizable ordering, tipping options, online reservations, and kitchen workflow features as well, making it a preferred choice for restaurant over Square. In summary, other than the POS system, Square also offers EDM solution, email marketing, inventory management, accounting, payroll solutions. However, many larger corporations are also offering these services as well. So personally thinking, Square seems to cater to users who prefer simplicity and ease of use, making it a suitable choice for less complex needs and general business owners. However, considering the intense competition in the market, the sustainability of the seller ecosystem growth itself might be questionable. So one of the way to build sustainable growth is probably overseas expansion, which Square is now available in the US, UK, Ireland, Canada, Australia, France, Spain, and Japan. But and if we were to look at the company as a whole in terms of geographical breakdown, more than 90% of the revenue comes from US. The international market has been contributing increasingly to the total revenue from 311 million in 2020 to 1.2 billion in 2022. In 2022, the international market accounts for 6.9% of the total revenue. I believe the future growth engine might need to come from the international market, especially for the seller ecosystem. So just now we discussed the seller side of the Square business. Now let's dive into the Cash App, another ecosystem Square is building. In 2013, Square launched Cash App, initially focusing on a specific problem, moving money between people in the simplest way possible, which is peer-to-peer transfer. Then over time, Cash App evolved into a digital bank, allowing customers to store a balance, make payment, and even issue Visa card. Square also expanded its services to include tax filing and lending services, creating a comprehensive financial ecosystem. In the context of Singapore, it's akin to GrabPay. Essentially, Cash App is in the direct competition with other payment platforms such as Venmo, PayPal, Apple Pay, Google Pay. On a side note, Cash App also offers a Bitcoin exchange and fractional share purchases. I believe the main reason Square is doing this uh, is that stock and Bitcoin traders tend to monitor the prices movement every day. Meaning to say, uh, they frequently open Cash App to check the stock prices, the Bitcoin prices. The more often they access the Cash App, the more likely they are to explore and use other services provided by the Cash App itself. So, in other words, Square um, probably doesn't really think that Bitcoin exchange itself will actually help Cash App to make money. It's just part of the ecosystem that Square want to build. Today, Square also wants to connect the two ecosystem, the Square seller system and the Cash App ecosystem. For instance, business owners and their employees often have financial needs that not met by the seller ecosystem but addressed by the Cash App itself. Additionally, in terms of payroll, employee can choose to receive their pay through Cash App. So Square believes that this ecosystem have multiple connection points, presenting an opportunity to drive the traffic between them. This strategic approach led Square to acquire Afterpay in 2021 itself. Afterpay is basically a buy now, pay later service. It has relationships, buyers, and sellers. It offers a new way for seller to boost their sales and provides fresh discovery method for people using Cash App itself. So this is quite important for Square ecosystem. Overall, the more connections Square establishes between the ecosystems, the more resilient the company becomes, enhancing the competitive advantage. All in all, Square or Block is building an ecosystem of ecosystem. The company aims to establish a network of tools and services tailored for a specific audience. Square caters for seller, Cash App to consumers, Tidal for artists, TBD to Bitcoin developer, and Bitcoin hardware for those looking to engage in the emerging economic landscape. The strategy itself reflects Block's broader visions of providing specialized solutions within various sectors, creating a comprehensive and interconnected ecosystem. So Blocks wants to create a closed loop ecosystem by enabling direct payments between consumers and merchants. So in 2022, Block pay approximately 60% of customer transaction fees to the third party here for interchange, assessment, processing, and bank settlement fees. If Cash App customers were to utilize their balances for transaction with the Block merchants, Block's net take rate could more than double. So a significant advantage of being a closed loop network and engaging directly with the merchants and consumer is the ability to analyze consumer and merchant data. If you were to look at Visa or MasterCard, they basically don't have this data, but Block possesses this valuable data. So over time, this data can help merchants target customers and reduce customer acquisition costs and enables the creation of offers that customers are more inclined to transact on itself. So overall, I think the closed loop ecosystem is a big draw for growth investor, and hence the market cap ballooned to 130 billion. But why it dropped 80% to 28 billion now? Since Block has one of the most beautiful story for growth investors. I reckon simply enough, the reason would be Block was overvalued. First of all, um, sorry. Now let's also look at the financial statements itself. Okay, I like to look at the Bitcoin segment first. I know a lot of investors are excited about Block offering Bitcoin trading. However, it's not exactly a booming business per se. So although it may seem significant when viewed as a percentage of the total revenue, for example, Bitcoin revenue was 7 billion in 2022, uh, out of a total revenue of 17 billion. It's crucial to note that Bitcoin revenue alone is not a meaningful metric. To truly assess the segment, the Bitcoin segment, you need to consider the gross profit. So in terms of the gross profit, the Bitcoin segment generated 156 million in 2022, which accounts for 2.6% of the total gross profit itself. And looking at the latest quarter, Bitcoin gross profit remained relatively flat at 44 million, contributing to just 2.3% of the total gross profits. So if we were to look at the number of Bitcoins held for customer, it's only 25,000, amounting to 700 and $63 million. In comparison, the competitor Coinbase has around $124 billion in crypto assets, and with Bitcoin representing 49% of the total cryptocurrency, equivalent to $60 billion itself. Having said that, if you really want to own a cryptocurrency trading platform company, the first choice out there is still Coinbase. I believe investors should not be overly excited about Block Bitcoin exposure, especially considering the Bitcoin market prices fluctuate widely itself. When we look at the gross profit, we are seeing the Cash App is growing stronger. The gross profit grew from 182 million in first quarter 2020 to 968 million in second quarter of 2023. In comparison, the seller ecosystem, Square, gross profit has been stagnant for a while now, hovering around 600, 700 to 900 million itself. So, but if you were to look at Cash App, the gross profit actually increased from 600 million to about 968 million now. So Cash App gross profit as a percentage of the total gross profit previously accounts for 33% in 2020, but now it accounts for 52%. This indicates that Block might have a promising future with Cash App itself. However, it's also worth noting that the peak growth period might be over, as we have been seeing slower year-on-year growth in Cash App and Square itself. The gross profit year-on-year growth was 211% in third quarter 2020 for Cash App. Now it is just 33% year-on-year growth in the latest quarter. In the second quarter of 2021, Square ecosystem gross profit was growing at 85% year-on-year, but now it is just 17%. And when we look closer, we can also see that operating income has not been doing well. They have been a couple of quarters of positive operating income along the way, but mostly Block is not able to generate consistent positive operating income. They are only able to come out positive double-digit year-on-year growth in terms of gross profit, but again, the year-on-year growth has slowed down to just 33, sorry, here, 27% in the latest quarter itself. So in general, if a company is not profitable, the company needs to show robust revenue growth, because growth investor will view it as the company are willing to delay the profitability to achieve faster revenue growth per se. So, but in such cases, strong top line revenue growth number is expected. However, in Square case, the year-on-year gross profit growth has slowed down to just 26-27%, so which is relatively disappointing for growth investor. Gross profit margin, on the other hand, is around 33% in comparison. If you were to look at Visa operating margin is 64%. To put it simply, existing Visa investor or payment company investors might still prefer the traditional payment company like Visa and MasterCard due to the profitability and profit margin itself. So we also like to look at the gross processing volume, which is quite important. It basically includes Square GPV and Cash App business GPV. However, if you look at the year-on-year growth number itself, it has slowed down from, let me give you a number itself. It has slowed down from 87% in second quarter 2021 to just 12% in the latest quarter. So you might be disappointed with the slowdown of the GPV, but I would say that it's not entirely Block company faults itself. It's more of the slowdown of the US retail sales itself. It's not because Block has some fundamental problem. We could also notice that the transaction value, the transaction revenue as a percentage of the total GPV is always 2.8, 2.9, 2.7%. It indicates that Block is not able to charge higher fees here. So this is why I would like to emphasize that the growth of the GPV is important. But this figure itself, right, is more tied to the economic outlook. The e-commerce share in the North America retail sales is about 23%. So when we talk about e-commerce penetration rate, I would say that if you believe that more people will buy things online now as the e-commerce penetration rate will go higher, Amazon is one of the best players out there to benefit from it. But more than 70% of the transaction is still happening in the offline market. So the total addressable market is still huge for Block company as well. And Block with its point of sale system, I would say is able to capture a sizable market share. Lastly, I'd like to briefly discuss about Cash App's market share. Unfortunately, I cannot find any research indicating the market share. However, based on the survey on how often respondents use various mobile payment apps for purchases, we can observe that PayPal is currently the preferred choice here, followed by Cash App, Apple Pay, Android Pay, Facebook Pay, Google Pay, Samsung Pay. Essentially, the competition in the digital wallet is also quite intense as well. And just remember that Apple is a strong competitor here as well, because as long as you own an iPhone, it is a natural progression that you use Apple Pay. So basically, hardware plus software combined is still a better ecosystem itself. I would like to talk about valuations. We actually use a discounted cash flow model to derive a fair value of $60.29 for Square. So if you compare it to yesterday closing price at $46.69, it's actually represented an upside potential of 29%. Some assumption I make includes a WACC of 13% and a terminal growth rate of 9.9%. Okay. So in comparison, the 12-month target price according to Bloomberg consensus is $77.94, which represents an upside potential of 66.9%. So it's much higher than my target price here. All in all, I reckon Square is okay. But in terms of the entire payment, digital wallet industry, or payment industry per se, my preferred choice is still Visa and MasterCard. I would say Visa and MasterCard are safer choice compared to Square itself. And probably in the portfolio constructions point of view, a Visa and MasterCard should actually have a higher weight relative to Block company itself. And I shall end my presentation here. So if you find my content useful, please subscribe to us. My channel is Talk with James, and let's now proceed to the Q&A sessions. Please type your question in the Q&A box, and I will try to answer all of the question here. Okay, see a few questions. So can you comment on the recent drop in Unity? Yeah, sure. I don't follow Unity news that closely, but basically, about a month ago, Unity wants to charge the game developer on a per install basis starting 2024, and the so-called runtime fees as well. So I reckon the move itself, right, will chase away a lot of game developers. Um, and if a gamer doesn't like the particular game, he can just install, uninstall, and reinstall to actually make the game developer suffer. So naturally, when they first announced the news itself, right, it created some backlash, and ultimately Unity has to change the pricing model again. So if I'm not mistaken, the new runtime fees is kind of like final. Um, um, so the runtime fee itself will incur if the project actually go above maybe 1 million in revenue itself. And Unity also offers, also issue an apology letter itself and say, yeah, just deal with it. I already issued my apology letter. So I would say that maybe some of the existing projects and past projects will not be affected, but the question is how many ongoing projects will be affected. So far, I don't have the answer yet. And I think that a lot of game developers probably will still stick with the current project with Unity, but for the future projects, right, they may work with someone else. So basically, the trust in the company itself is probably broken. The more important question here is Unity worth investing? I would say that the decision to try to encash your game developer this quickly is a mistake for Unity. As I don't think that Unity has achieved the network effect yet in the gaming industry. So we can also see that recently the CEO John Riccitiello, if I pronounce it correctly, already stepped down. basically, I think the company want to make him a scapegoat of it. I reckon Unity can do better with a new CEO, but I think a few days ago I tried to look into the profile of the new CEO. I don't think he has a best record as well. So the succession problem will be an issue because he is also a interim CEO. I think the entire uh, ecosystem that Unity is trying to build is quite okay. It's quite convincing. I think it's just lack of a good CEO to execute it itself. Yeah, so I think this is my idea. Um, I probably would look into Unity in future and do a seminar in it itself. Yeah. Okay, next question. You mentioned that Hang Seng will rebound in the fourth quarter. So should I sell US stocks and buy some Hong Kong stocks now? Okay. A good question. I think the main reason you are asking is because US, no matter how much correction it actually encounter, is still trading at a higher price itself. Whereas Hong Kong market is still trading at near the year low, I believe. So, but I would like to say that there are only limited Hong Kong stocks that I like. Basically, there are Meituan, Tencent, uh, BYD, uh, US listed Pinduoduo. So I think they are worthwhile for long-term investment, but Hong Kong stock itself are basically pump and dump trading strategy. They attract a lot of pump and dump traders for in the past 2 years. So maybe from a long-term return standpoint, I would still prefer US stocks in general. I am not good in market timing, I would say that, but still I would say that Hong Kong may stage a meaningful rebound than US near the end of the year. But I don't think that investors should be selling some good US companies at this stage because you simply do not know how deep or how shallow the corrections will be for US stocks itself.